Welcome back to another video. In this video, we are going to cover the MACD. We are going to talk about what is the MACD, how does the MACD help us, how is the MACD calculated, and MACD in action. So let's get started. First and foremost, what is the MACD? So the MACD, which stands for Moving Average Convergence Divergence, is a trend following momentum indicator that showcases potential reversals, momentum, and helps determine the trend. Once again, the MACD stands for Moving Average Convergence Divergence. It is a trend following momentum indicator, right? So this is how the MACD looks like. It's down here. Just like every other indicator we went over, the MACD is down here below the chart, right? And you can see how it looks. It looks very confusing when you first look at it, but I'm going to break it down. So let's jump into the MACD. So once again, this right here is MACD, and this right here is price action, okay? Now, if you look at the MACD, we have a lot going on. So let's focus on everything step by step. So the first thing we're going to break down is the MACD line. So the green line that you guys see here, this green line, that green line is the MACD line. So what is the MACD line? The MACD line is the difference between the 12-period EMA and the 26-period EMA. So basically, the MACD takes the difference between a 12-period exponential moving average, right, and the difference between the 26-period exponential. So it takes the 12-day exponential moving average and the 26-period exponential moving average from the stock's price. Once it gets that, it gets the difference between the two. That's how the MACD line is formulated. Next, we have the signal line. The signal line is the red line. So if you guys take a look, the signal line is this red line. It's this red line right here. The signal line is the 9-period EMA of the MACD line. So basically, the way the signal line is formulated is after the MACD line gets its number, its final number, the signal line then gets the average on a 9-period exponential moving average for the MACD line. Right now, the formula behind that you don't have to do. Once again, the system does everything for you, right? So the system is going to do everything for you on that end, so you don't have to go take notes in the formula and say, I have to remember this, because that's not important. The important part is understanding how the MACD works, understanding what it showcases, right? So that is the MACD line and the signal line, which is right here. Now, if you guys take a look over here, we have something else going on over here. So what is that? That is called the MACD histogram, right? You guys see the red and green bars here, right? The MACD histogram simply represents the difference between the MACD line and the signal line. The bigger the gap between the lines, the higher the bars that the MACD histogram will display. The wider this gets, the bigger the bars get. The wider this gets, the bigger the bars get. The tighter it gets, the smaller the bars get, right? So that's the histogram. Just to recap, the green line is the MACD line, the red line is the signal line. Right here we have the histogram. Now, depending on what platform you're using, you'll probably have different colors. So if you use a different platform, the green might not be the MACD line, but you can go in your settings, you can change that, right? And I'll show you how to do that. I'll work with TOS and I'll show you how to change the colors. But just because this is green doesn't mean on another platform it's going to be green. And that applies to every single indicator that we go over, right? Now let's jump into the MACD a little bit more and understand how it works. Now, understanding the MACD, we broke the MACD down. Let's understand it on a deeper level. First, when the MACD line, which is a green line right here, right? When the MACD line goes above the signal line, which is the red line, right there, that means that the stock's momentum is possibly increasing. Same thing here. goes above it, momentum is increasing, right? That's what that means. Number two, when the signal line, meaning the red line, right here, that's the red line, goes above the MACD line, as you guys can see, it goes above the MACD line in this situation, right? That means the stock's momentum is now decreasing. And obviously, if the momentum is decreasing, there is somewhat a possibility, once again, I use the word possibility, that the stock may go down, right? When the MACD line crosses above the zero line, this right here is the zero line, right? When the MACD line crosses above the zero line, this signals an uptrend. So if the MACD line crosses this, that signals a potential uptrend. When the MACD line crosses below the zero line, if the MACD line goes below the zero line, that signals a downtrend. Now, one thing I want you to keep in mind, right? Very simply, you keep this in mind, and we mentioned this in the introduction of technical indicators. Just because the MACD line crosses the signal line doesn't always mean we're going to go in an uptrend. Doesn't mean you always buy. Remember, it all starts from price action. It all starts from the chart. It all starts from the bigger picture, and then you come here to confirm, right? And I'll break that down in the ending lesson in this part. But just understand, everything we're going over, don't think, oh man, I found the holy grail. As I mentioned before, there is no holy grail in trading. It's all in price action. So keep that in mind. I'm just refreshing that once again so it's popping up for everyone and everyone's on the same page right now, right? Now, so we broke down the MACD. Let's understand the histogram. So this is the histogram. Let's understand that. Let's break that down and have a better understanding of it, right? So what is the histogram? As I mentioned, histogram shows us the difference between the gap between the signal line and the MACD line, right? Now, first example is when the MACD line, which is a green line right here, goes above the signal line, which is a red line, histogram becomes green, right? So if you look right here, see how the MACD line goes above the signal line, right? This is green, right? When the signal line, which is the red line, right here, if you look right here, goes above the MACD line, see how it's above the MACD line? Histogram becomes red. Histogram becomes red, right? When you keep moving forward and you see when the MACD line, which is the green line, right here, MACD line, is above the signal line, red line, it starts to curve down, histogram becomes dark green. So if you look right here, the MACD line is above the signal line, but see how it starts curving down and the gap here gets tighter and tighter? That's why the histogram is getting dark green. That's why it's formulating a darker color. Now, when the MACD line, the green line, is below the signal line, right? See how it's below the signal line? And starts to curve up. See how it starts to curve up? The histogram becomes dark red. So if you take a look right here, see how the cross happens? Once the cross happens and the MACD line goes below the signal line, it's light red, right? The wider this gets, right, the wider the bars are going to get. Once they start getting tighter or the MACD line or the signal line start curving, this switches colors, showing momentum is slowing down. Same thing here. Look, it crosses, the colors switch, right? As the colors switch, they keep expanding and going separate ways, which is why it's light green, light green, light green, light green, light green. Gets dark a little bit, light green gets dark, light green, and then look what happens here. Dark green, dark green, dark green. It's dark green because the gap here is getting tighter and tighter, which indicates the momentum is possibly decreasing or maybe the trend is coming to an end. And then just finally, the wider the gap between the signal line and the MACD line, the wider the gap that gets here, the larger the histogram bars get. Right? Very simple, very straightforward. Now everything, once again, as I mentioned, don't automatically think that this is the holy grail of trading. A lot of people use the MACD and think, okay, I'm going to use this and it's going to help me with my trading or it's going to make my trading so much better. No. Like I mentioned, price action, price action, price action. And I'll show you a bunch of examples showing you how it works and how it doesn't work either, right? Now you can see this is the MACD. Typically, what the MACD shows is if the green line goes above the yellow, if the green line goes above the red line, there's a high possibility that the stock's momentum increases and it may possibly go up. Vice versa on the other end, if the two lines cross and the red line is above, that indicates that the stock may possibly go down, and you guys can see so on here. Now, everything I just showed you right now, everything I said in the past 30 seconds, right? You're probably thinking, wow, it's that easy. I just need to see a cross. Now, think about it, right? By now, if you've seen all the videos, by now you should have a very solid understanding about trading, that it's not that simple, right? You shouldn't even think like that. You shouldn't even think that, oh man, all I need is this to cross and I'm gonna have a buy signal or sell signal. If you're still thinking like that, or you're still stuck on trading being that easy or systematic, you're wrong, right? And this is what people showcase about the MACD indicator or other indicators, that hey, if it signals this, you buy. If it signals that, you sell. No, let me refresh again. The MACD or any indicator, use them as a confirmation tool. Follow price action. It's very easy for me to go back in time and say, hey, look at this, or hey, look at that. But in reality, when you look at the indicators, it's much more different when it's happening in real time and you put more pieces together. So like I said, if I show you these examples, they look great. But if you actually go through all of these crosses, that would mean, okay, I buy here, cool, you made money. I short here, I lost money. I short here, cool, I made money. I buy here, right away, it doesn't make me money, right? Over and over again, if you look at the crosses, each crossover doesn't mean good. So that's where you're looking at price action. You're seeing that this stock is getting congested, breaks out. Cool, MACD is going up. That is giving us a higher confirmation. Use it as a confirmation tool, and I'll show you how to do that. Now, before we jump into charts, let's just recap. How does the MACD help us? Helps us in 4 different ways. It helps us confirm the trend. It helps us identify if momentum is increasing or decreasing, right? It helps us with something called divergence, which we'll dive into later, right? So keep this in mind. It helps us with something called divergence. And the MACD works best in trending markets. So keep this in mind. This is not how it really helps us, but this is just something to keep in mind. The MACD works best in markets that are trending. If a stock is trading sideways, right, I wouldn't really be a fan of using the MACD. And also, when I personally use the MACD, I like to use it more so for swing trading or larger time periods. I'm personally not a fan of using the MACD or primarily almost any indicator on a smaller time period, which I will break down in the ending video of this full part. So now, let's jump into the chart so I can break down the MACD a little bit more and you guys can see live examples. All right, so right now we're looking at Apple's 3-year 1-day chart. Right, so what we're going to do is we're going to apply the MACD indicator. Once again, how do we apply the indicator? Depending on what platform you're on. But right now, I'm using Think or Swim by TD Ameritrade. So if you're using that platform, you can click this section right here to apply the indicator, just like every other indicator we have covered. Once you click that, you can plug in the indicator. So we're going to search for MACD. Once I search for MACD and this pops up, just hit Add Selected. Once I hit Add Selected, the MACD is here. Now, if I want to change the color, change any of the numbers, I can click this Edit button and I can change the length, 12, 26, or 9. And now remember, if you change the length, understand why you're changing it. I keep it standard. I'm not changing it. If you want to change the colors, there's a lot of different ways to change all the colors here, depending on how you want to go about it, right? I'm not going to change anything. I'm going to keep it standard, and I'm just going to hit OK. Once I do that, I now have the MACD applied. Now, let's understand a few things. Now, if you guys take a look, let's see what the MACD is showing us. So the MACD is right here. You guys can see it's giving us the name too, MACD, right? Now, we're on a 3-year 1-day chart for stock Apple, right? And you can see the MACD is going all over the place. Now, let's understand some things. Let's break some things down and see what's happening. Now, first and foremost, we have divergence. I'll show you where the divergence is, and then we will apply something right after. So, okay, 210, major critical level. You can see resistance, major support, supply or demand zone right here. We went over this in the beginning, right, in the supply and demand zone section, but you guys can take a look. Around 215 to about 210, we have a major critical zone, right? Now looking at this major critical zone, let's say go to 215. This is what we have established at the moment. Now, right now, what is the MACD showing us? So there's something called divergence. As I mentioned, I'm going to dive into divergence more. What divergence is, just to kind of give you a sneak peek, and then we'll jump more into it in the upcoming lessons, is when the stock is either staying flat or the stock is going up, but the indicator is going down. You can see the indicator is going down. That's already a sign that there's a possibility that the stock may go down. But remember, as I mentioned, price action is king, not the indicator. Now, obviously, for this stock to go down, what is the price action concept that we would need? We would want the stock to break below 210. Why? Because there's a lot of demand at 210, 211, 212, and so on. You can see over and over again. Once it breaks 210, you can see, let's get our confirmation. Breaks 210, retest 210. Look at that retest, not a strong retest, and boom, continuously goes down. Now, obviously, if we just focus on price action, this itself is giving us enough confirmation to take on the trade. Also, if you combine other factors, the market was selling off at this time. Apple was surrounded by a lot of bearish news, bearish sentiment, price action showcasing us it broke a critical level, and so everything was kind of working out on the price action end and on the market end and the sentiment of the stock, right? Now, at this point, the MACD, in my opinion, is just something that's going to say, okay, cool, it's on a downtrend. It's helping us confirm the downtrend. That's really about it. But me seeing this, right, and this is my problem with indicators because they don't really predict, right? And nothing really predicts, but a better confirmation, in my opinion, is price action, right? And just following that, and that's how I personally trade. But just looking at the MACD at this point, right, all it's showing us is, yes, we are on a downtrend. Good, confirm, you are on a downtrend. The stock is moving on a downtrend. Nothing more, nothing less, right? Taking a trade, once again, should come from price action. Now, you can see, same thing over and over and over again. Now, this is where it sort of gets tricky. If you look right here, this is where people get tricked with these indicators. They're like, oh yeah, it's curving or it crossed. I should buy. So what people do is they're like, time to buy. It looks like it's going up. This is curving and I'm going to take on the trade. So they buy, right? Now, we as traders, from everything that I went over, when do we buy? When do real good traders buy? We need some things. If we see something is on a downtrend, we're not buying because the indicator is telling us to buy. Because that's false. Because the indicator is going to follow what? It's going to follow price action. So what the indicator is doing right now, it is just telling us that price has been going up and it's following that. What we as real traders need and want is we want to have catalyst. Why is Apple going up? Why did it go down? It went down because of reason X, Y, and Z. Is that reason resolved? A. B. What's happening with the overall market? If anyone remembers in 2018, Apple was selling off in the last 2-3 months. The sell-off is still happening. Right now, all this stock is doing, it's trying to fill this gap. Right? It's just trying to fill that gap. Stock fell, took a break. Fell, took a break. Fell, taking a break. People get trapped here because they follow indicators too much. They go, okay, it's time for me to buy. Me, I'm not buying unless I have a catalyst to reverse, right? Some new catalyst coming out, or if the market is picking back up, or something is showing it, buying pressure will pick up, and I would only be a buyer above 185. Right now, I'm not interested. I'm not looking to buy. I know the direction is on a downtrend. This is taking up. It's still on a healthy downtrend. I'm not buying this right now. That's what you have to keep in mind with every indicator. This is not telling us that this is going to keep going higher and higher. It's just confirming what price is doing, which is why I'm not a big fan of a lot of indicators. I'll show you what I use, but I'm not a fan of a lot of these indicators, and I'll explain why towards the end. But if you guys just understand the basics of what I'm saying right now, you'll see why following them blindly as I mentioned in the intro video, is very, very stupid. Why? Because you're going to end up making a lot of bad trades, right? Follow price action. And I bring that up so much because we as humans are wired to be like, all right, it's curving, it's green, buy. I'm going to go in and buy. No, I don't want you to make bad trades. Doing that is you making bad trades. You want to make high probability good trades coming from price action and a deeper understanding. This is just telling us, hey, this is crossing. Why is it crossing? Because think about it. Let's apply common sense. Stock made a huge move down and aggressively picked up. Obviously, this is going to reverse. Why? Because this is getting information from price action. We wait for the 185 move. And look what happens. Boom. Dumb money or dumb traders are getting caught in that. Smart money is not. They're still looking for the shorting opportunity, or they're still looking to buy puts. Look at that. Continuation. Continuation. New low. Continuation. Same thing again and again and again. Over and over and over again. Right? Over and over. Look at the crosses. Now is when it starts trading sideways. And if you just understand that simply, that we don't want to get trapped here. A lot of people get trapped here because they're too comfortable on following indicators. They are not the most effective to use by themselves. Make sure, please make sure you're following price action. You understand the trend. That's why I've covered those lessons first. What is the trend? It's on a downtrend. It's taking a break. Why would you go against the trend? I'm not going against the trend because my indicator is telling me that momentum is picking up. It's still on a downtrend. If it reverses the downtrend, then maybe I will look at this and say, okay, it reversed the downtrend. My indicator looks good. Now I can possibly look to add this on, right? And you can see, same thing. It finally starts picking up. Stock starts reversing. And then, there's no real crazy movement. But you can see that's where the sideways action happens. After it trades sideways, we get a gap move, gaps up, and then sideways, and then continues moving up, right? There's a huge difference of seeing something like this, and there's a huge difference of seeing a play like that. Complete two different plays, right? Same thing here. Now I want to bring something up, right? Just to kind of alert something. If you guys take a look, right? Now it's very easy for me to pull up the MACD indicator and say, hey guys, look, it crossed. If you bought on this cross, you would have made so much money. Look at that. Easy move. And you get out right there. If I made a video showcasing that and just that, a lot of people would be losing money in the long run, right? Once again, this looks like a perfect example if I am here trying to promote the MACD. If I'm trying to say the MACD is the best thing ever, if I'm trying to sell you a holy grail signal. A holy grail signal does not exist, guys. As I mentioned, it's price action. Now, some of you may be wondering, okay, well, this crossed, but the stock is going up. Yeah, it crossed and the stock is going up, but the stock is not going up because of this reason, right? Think about it. A stock is never going to say, all right, the MACD is crossing, it needs to go up. That doesn't work. Like, that's not realistic, right? Yes, it's a confirmation tool. Yes, it can help us in those ways, but it's not a tool where it's going to tell us the stock's going up or down, because if it was, it'd be very easy and simple to trade off it, right? Now, the reason this went up, and if you want to check it, you can go and you can check what's going on. You can go look at 6/3/6/4/2019, and you can see the market news that came out. Market news came out, which I don't want to jump into right now and throw people off. Basically, this is what happened. There was negative news on the overall market that came out here that completely threw the market down. That negative news that came out here came out again, but it came out positive now. The market reversed. It happened to reverse right there. Now, if that negative news did not come out, I will tell you exactly what would have happened. It would have went something like this. So yes, one time it worked out, cool, but in the long run, it's not going to work out. And if you look at SPY, let's look at SPY on 6/3 just to kind of take a look at that. Look at SPY on 6/3, right? This is 6/3 right here. All right, let's look at SPY. That's 6/3. Look, same thing. SPY went down, pull back, went down. 6/3, boom, market reverse, consolidated, boom. Right, same exact thing. That's the overall market move. That's not the MACD doing its work, right? Let's go back to Apple, right? Now, if you go back to Apple here, guys, just to go over this, the MACD once again works very well for trending stocks, right? If the MACD line is going up and is slowly increasing as this one is increasing, it says momentum is increasing, or the trend is still going up. If you are looking to use the MACD, just to recap everything, use it for trending stocks. Use it for a bigger picture. Do not go and use it on a 5-minute chart, because if you use it on a 5-minute chart, let me show you an example. Let's say you use it on a 5-minute chart, right? This is a 5-minute chart for stock Apple. Now, if you look here, we're going into, let's say 10-2, 9:30 a.m. starts right here. We are on a 5-minute chart. 5-minute chart means each candle represents 5 minutes. Now, if I keep progressing, right, I keep progressing, look at the MACD, look at the MACD. What's it doing? It's crossing. The MACD is crossing right here. As the MACD is crossing, the MACD is telling us, hey, stock looks like it's possibly going to go up. That's our critical level. Us, as traders, we know that the stock is on a downtrend. We know for this downtrend to maybe finish, it needs to break above that level. Right, so let's draw that line just so we have it established. And let's keep moving forward. Look at the MACD, look at the MACD, look at the MACD, look at the MACD, over and over and over and over and over again. And now for other people that are probably like, oh, it's because it didn't cross the signal line. Cool, it's crossing the signal line here, guys. It's now crossing the signal line, right? That's the signal line, the purple line. It's crossing that. What about now, right? Would you go and would you buy it now? Look. It keeps going down over and over again. It crossed the signal line. It's above the signal line, but it's not effective, right? But now if you took the same trade, right, and you said, and you told yourself this, right, if you switched up your way of thinking, okay, stock is on a downtrend, it's consolidating, it breaks down, it's retesting. That's what it's doing. It breaks down, pulling back, and it's retesting. Most people, oh, MACD's crossing, histogram's getting green, I should buy. No, like that shouldn't happen, right? That's a very bad thing to do. It's a very bad trade right there. If you focus on price action, if I wanted to be a buyer, or if I, let's just say I wanted to follow that once again, I want to see that break. I want to see a strong break. I want to see the market too. I want to see the market pick back up too. Boom, continuation, right? It breaks this point. Continuation. That's a continuation move down. It's a continuation move down over and over again, right? But looking to trade this off just that simply or whatever the case is not the best thing to do in my opinion, right? Same thing here. If you guys look at another example, right? This is going back to divergence. You can see stock's price is going down, MACD is going up. It's giving us divergence, but the trade does not come in until it breaks our price action concept. These are just training wheels. They're just added to confirm. They're not going to be used to tell us that, hey, I should buy because they're crossing. No, right? Just to recap on everything. The MACD indicator shows us momentum and it possibly shows us the trend, if there is a trend, and confirms it, right? The MACD indicator, in my opinion, should be used on longer term time periods if you are using it, right? I personally don't use the MACD. Right? And I don't think if you're day trading, you should use it either. I think it throws off a lot of false signals, right? So if you are someone that wants to use it, you want to apply it, cool, but do I think you really need it? No, I don't think it's needed. And I'll show you the way I trade, what I apply, what I don't apply. But depending on how you're trading, let's say you're trading a stock that's trending and you're capturing trends, then cool, this could be a little bit effective. But the problem with indicators, in my opinion, especially this one, is that they only show us what has happened. They confirm this. A lot of things can change in the upcoming days, and obviously I basically believe in looking at supply and demand zones, the direction, what chart phase, understanding price action on a deeper level. I would personally rather focus on that and not focus on these and make my trading a lot more easier.